G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be walking through the templates and mastering the templates with the purpose of identifying a best trade candidate in the session that you're trading. And just to remind traders, everything you need is in this playlist. All the other videos go over everything in detail: timings, levels, behavior of price, and I'll continue to add to this. And each video fills in any unanswered questions or questions you may have if you're just coming upon this now, or if you're still trying to improve and develop the skills. Everything is in here. And today we're going to be going over the templates. Now we're just going to review a couple simple concepts. I'm hunting out parabolic trade setups, so I want to clarify that. Traders, there's a difference between identifying a specific type of opportunity that will present in the market versus just catching moves when they're at the highs or at the timing window or getting into a move, that sort of thing. I'm looking at rinse and repeat setups that show up again and again and again. And I'm constantly posting this quote of Jim Rogers: I just wait until there is money lying in the corner, and all I have to do is go over there and pick it up. I do nothing in the meantime. Once the penny drops with that, and you understand the scalability of these parabolic opportunities, then there's no urgency or FOMO or all the other types of behaviors that are self-destructive to traders. Today I'm going to go over the basic understanding. Regardless of which instrument you look at, it has a weekly template. Some weeks your favorite instrument won't set up with a best trade candidate, yet traders will be constantly trading one or two markets because they're trading experts. And I'm first person to tell you I'm a terrible trader. That's why I stick to trade setups where it's easy to make money on, rather than try and figure out what a market's going to do and trade it. I'm just hunting out the easiest, lowest stress, scalable, rinse and repeat opportunities. Sometimes I'm going to miss out on a better instrument, but I'm still hunting out the parabolic trade setup on any instrument that I'm trading. So today I'm going to go over a normal Monday to Friday weekly template. You've heard me repeat the phrase Monday is day one. That is all I'm going to go over today, is Monday to Friday, and just go over 4 or 5 different types of templates that show up, and emphasize to traders, I'm not trying to trade movement inside. I'm sitting on my hands and waiting for the market to set up. A best trade parabolic setup where I have a 90-10 opportunity. And what that means, and traders will, when they understand this and they're trading them, is that there's virtually little heat against your position. And the opportunities show up again and again and again, rather than sitting in a market. An excellent question I got today was, do you often get 10 to 15 pips of heat? Parabolic trade setups don't get 10 to 15 pips of heat unless you're trading a market with 50 pip wicks, which again comes back to the understanding of the wrong timing, the wrong setup, the wrong instrument, because parabolic opportunities don't get in front of major red news. There are different types of setups, but today I'm only specifically going to talk about the templates. If you have the right template and you have the trade setup, it's virtually almost impossible in the right setups, even if the trade, if you're selling down low thinking it's low-hanging fruit, or buying up high thinking it's low-hanging fruit, which again comes back, if you understand the templates, if the trade has already played out in an earlier session, I'm looking at a different template. So often traders are chasing the same trade that's already moved in either Asia perhaps or in London, and there is no trade setup in the US session. I'm looking for the opportunities that are going to explode in my session. I'm not chasing other moves. Now we have measured movements that we've talked about, range expansion trades. But today we're just going to look at the templates and the understanding behind those. Now some weeks, I'm only looking for the parabolic opportunity, and an instrument itself may only give me one super clean 90-10 opportunity in a whole week. Some weeks you may get 2 or 3 fantastic trades from one instrument alone. We saw that at the beginning of the month on the indexes. If you have a basket of different instruments chances are you will get plenty of best trade setup opportunities if you're patient and understand the templates. Identifying the templates as they develop is the key to identifying the parabolic best trade setup on an instrument in the session that you're trading. So you may identify the right template, you might even identify the setup, and you come to the screen for your session and it's already moved, or it just hasn't set up parabolically for that session and the trade never evolves, where another instrument may set up perfectly and as the entry criteria is met, continues to move in the direction of that trade strongly and explosively. The best part is I use hindsight to cherry pick the best opportunities in the market. The market gives us signals of potential 90-10 best trade setup candidates. One of my other favorite quotes is Bill Lipschutz. If most traders would learn to sit on their hands 50% of the time, they would make a lot more money, which comes back to something that I emphasize to traders. I'm not interested in taking 10 trades and being at the screen all day. I'm interested in taking one trade with size, 10 times the size of the 10 little piddlies where I'm scalping in and out, or I'm looking where can I go in with size with a 90-10 opportunity that's going to explode and be over in 45 minutes to an hour, be done and dusted, and get on with my day. Now, the basic model that I have put together for myself, and another question I got today, where did I learn this? And I learned this from 25 years of the School of Hard Knocks, from piecing together multiple bits of learning that have occurred from many people. Stuart Moore was one of the first people, the first person that I learned from. Peter Brandt, Brent Penfold, Bill McLaren, Alex Temez, to name a few. Bill McLaren, 40-year Wall Street veteran. Peter Brandt, 40 years trading commodity markets. Stuart Moore, 40 years of trading every instrument under the sun. And these gentlemen taught me many things, but mostly to become a master craftsman of what you're doing. Monday's day one, the basic model. Monday's day one. Day one, day two, day three, Monday to Wednesday. Wednesday resets and becomes the new day one heading into the close of the week. Wednesday to Friday, day one, day two, day three. That's my first template that I'm looking for in a basic template. The second type of template that I can see is 3-day setups. We can get a failed breakout, which becomes a new day one. We will go over an example of this week where Tuesday broke out on a few markets and failed, and we had trades on Thursday, day one, day two, day three. Now, there are going to be opportunities on different instruments each day of the week because they're all in different templates. And we can also have another template where we get 3 days of breakout traders in the markets. Day one breakout starts the count. So, repeating, Monday is day one. Now, my basic model is that Monday is the opening range for the week. Tuesday forms the initial balance. These first two time frames typically will form the extremes for the week. In a high percentage of cases, one of these two extremes will hold, meaning that Monday could be the low of the week, and they could go up 3 days like we saw on the indexes and come right down and take out the low of the week and pull back inside. And Monday still holds as the low of the week. They've gone through it, but they've pulled it back. They've gone higher than Tuesday. They've taken out the high on Wednesday. 3 days of breakouts, collapse back down to the low of the week. But Monday, Tuesday helped me form my thesis. Now, just to repeat, we're not talking about setups on each day of the week. I'm just talking about the templates. Wednesday is the midpoint range of the week, 50% of price and time for Monday to Friday template. And Friday is the closing range of the week. Now we're going to talk about signal days. Signal days, not setups, signal days. So signal days are what potentially alerts me to an instrument possibly setting up over 3 sessions for me into the US or front side, back side, maybe in Asia, as we saw this week on the pound yen, euro yen, and yen, US yen. So signal days are important because they are impending signs of a potential opportunity coming, whether it's that next day or within a couple of days, a 3-day setup. Inside day is a day where the high and the low of the day's close is inside of the previous day's high and low. A first green day is a day that closes above the open after successive closing days, down closing days. Now remember, this is a signal day. We're not talking about setups, we're talking about signals. And a first red day, which is a day that closes below the open. Sorry, first green day was above the open. First red day closes below the open after successive up closing days. And there are two basic main templates, a pump and dump template and a dump and pump template. Things that can affect different individual weekly templates. Major economic data releases, the Fed, non-farm payrolls, other fundamental factors, world events, wars, floods, those sorts of situations, strikes, government collapses, interest rates, whatever. The timing of the month. Each week can play out differently in a monthly cycle. I've talked about timings of months, of new months. We're not going to go through that. We're just going to stick to the basic model today and go through some templates. And it just may not set up. So again, the importance of having a basket of instruments, because I know some traders talk about just trading one or two because they've mastered those, and those markets are so good to them. But the same setups show up on every single market. I get this question a lot. Will this work on futures? Will this work on crypto? Will this work on shares? Every market's the same. If it has a high, low, open, and close, and it has people trading it and there's money involved, every single market is the same. You may be in a market that is in a sustained bull run. So I would encourage you to be buying the dumps with best trade parabolic setups when they present. We may be in a month that is going up on a currency and traders are constantly trying to just sell the high when all they need to do is have one or two buy low parabolic opportunities for range expansion trades, which is why I keep repeating, don't just sell the high and buy the low on an instrument. Understand where the parabolic opportunity is. And it just may not set up at all with asymmetrical risk reward, which means that traders are trading the high of the day because it's at the high of the day, but they're selling into a market that's making higher highs and higher lows, rather than selling a market that's breaking down with low-hanging fruit for 50 pip collapse with zero stress, which comes back to answer the question, do you get 10 to 15 pips of heat? Only if you're counter trending. You're counter trending the underlying trend, which is why we try to align ourselves with the parabolic trend opportunity. Let's look at the charts. Now we're looking at the Japanese yen. The blue dotted horizontal lines are the previous day's high and low. The vertical dotted line is the new day. And the green line is the closing price. So we're looking at Monday. And on Monday we have the close of Monday. We have day one longs in the market. Day one longs are in the market. The market broke out and closed over at the end of the day as a breakout day. We had the BOJ the next day. A lot of volatility on that pair. And again, I'm not talking about any trades or trading the news or anything else. We're just looking at the close and the template. So we have day one breakouts in the market. We have day two breakouts in the market. There's our opening range and initial balance. Now, this is something I want to point out. There's my high and low of the week. We have Monday, Tuesday. That's, as I mentioned, the two extremes, and those are my levels. Monday, Tuesday. There's my high and low of the week. Next day, we don't have a market that touches either boundary. So again, closed outside of Monday's high, and we have the close of Wednesday now, and it is an inside day. At the close of the inside day, we have a market that is broken out on Tuesday, day two breakout traders in the markets, and the inside day closes as a first red day. And right off the bat, the market breaks down in Asia for a first red day parabolic opportunity in our Asian session underneath closing price. And then we get a low-hanging fruit continuation in the London window. Now, this is 4 days into the template. So you'll notice Again, I know traders are going to say you could have sold the high and do all these things, and we're not talking about trade setups right now. I'm trying to explain the basic templates. We have a pump and dump template. They use the news traded up top until later in the session when New York opened and they closed back down into the news candle. We had first red day trade. We had low-hanging fruit trade. We have a pump and dump template on the Japanese yen. So one or two trades out of this whole template on the backside, which were easy free cash trade opportunities in a simple Monday to Friday template. We haven't even traded free cash Friday yet. We can see this market continue down. We have no signal day as of yet. We still had our inside day trading signal. This was our signal day. First red day that broke down and pulled back for the low-hanging fruit continuation trade after first red day in Asia. Just made a video recently on the inside day, the power of the inside day. Understand what a narrow range day is. It can be a coiling market for an explosive move. Day 2 offered a parabolic opportunity. Now, again, the inside day is a signal day and an alerting traders in how the template sets up on the day, which comes back to understanding what the setups are. And I talk about and emphasize repeatedly classical charting principles, how a parabolic opportunity will build. So there's our opening range and initial balance, Monday, Tuesday. And so coming back to day 3, as I mentioned to one trader yesterday, they went long in Europe from the low of the day, which was a fantastic reversal setup on a smaller time frame. And they were looking for a range expansion from down inside. Now, this is an inside day. Typically on a day that will do that, we'll break highs first and give a dump and pump template before going vertical. So when this market took out the high of London, they were still holding on to it, and they saw it collapse back into their position and getting stopped out with break even. We're not going to talk about that today, but this is a normal occurrence. Opening range, initial balance, and then traders are trading the inside, which is why I talk about Fugazi. Understanding if you are trading in there, that if you have a setup, know where your limitations are in terms of taking profits and managing your risk, and that it is either a session trade or a parabolic opportunity on day 3. Wednesday is day 3, and this is an inside day, which again is a signal day in a market. Now, we've got a market that's pumped up, but we also now have a high of week, and this is where traders also miss out on the dump and pump opportunity. The inside day is a signal day. This is a normal recurring template. Breakout, pullback, continuation. Day 1, day 2, day 3 is the signal day. A beautiful short squeeze setup off closing price in the London session for a parabolic trade is the type of trade I'm looking for. Trading, scalping in and out of little positions, catching moves and everything else this is inside. This is a parabolic opportunity in a day 1, day 2, day 3, 3-day setup. Tuesday is the high of the week. That's our initial balance. Wednesday's an inside day. Thursday goes parabolic. That is a 3-day setup. This is the order flow. All the other gibberish and everything that's being told and, mixed up, this is a very simple template. Now, again, I want to emphasize traders may have missed this opportunity maybe on Tuesday because it wasn't in their session. This was a U.S. session opportunity. Inside day, no trade signal. Parabolic opportunity in London. This one trade itself, 40 to 50 pips, scalable in size. A fantastic opportunity on Thursday, a Thursday trade. These templates are not about trying to catch all these moves. They're about identifying a parabolic opportunity, maybe just once a week. Which brings us to gold. We've gone over this chart previously this week, but we have an inside day on Monday that breaks higher towards the end of the day and closes as an inside day, narrow range inside day. And we had a beautiful parabolic trade in the U.S. window on Tuesday that went vertical. That market then proceeded to behave similar to the euro in terms of breaking out and then pulling back, and also closing as an inside day at the close of Wednesday. Day 1, day 2, inside day, and first red day on Wednesday. I didn't mention that on the euro, but also a first red day. So timings, levels, behavior of price. How does price behave on the day? So again, you can have a first red day signal, but not a first red day setup. As we saw in the Japanese yen, we had first red day setup in the Asian session, a first red day setup in the London session. We have a first red day signal inside day, but we don't have the setup. We have higher highs for the dump and pump heading into major red news that goes vertical into the high of the day and fails there at the New York Open, collapses back 50 pips. And as I mentioned to traders, gold, I call gold FAFO. Fool around and find out, and in terms of using a more politically correct first word. But this is because it's Thursday. So, 50 to 75 pips up, 50 down, get off the screen. Because this didn't explode through, and I showed a similar template from back in October. Tomorrow's Free Cash Friday. This market is coiling for a potential explosive move. How do I know what it'll do? I don't. So, as one trader said, it could go up, it could go down, it could go sideways. Thanks for letting me know. Now, here's something I'd like to emphasize. If there's no setup tomorrow, whether it's in Asia or the U.S. session, why would I try to trade that when I can find an instrument that potentially may offer a simple, easy, parabolic opportunity, whether it's for low-hanging fruit, whether it's for an explosive move? We may see this market coil into the U.S. window for a huge parabolic opportunity. No idea. Could care less. I'm not trying to trade the movement and guess. I'm looking for the setup. This was a fantastic day 2 breakout trade after the inside day, signal day. We had a similar sort of setup that gave a news explosion first bar opportunity, a reversal opportunity for 50 pips at the New York Open. The timings again specific, and that's it. Get off the screen. And looking at oil, we had a beautiful parabolic opportunity on Monday after the inside day Friday. That's our opening range for the week. We had a parabolic continuation dump and pump template on day 2. Even though it closed as an inside day, we had the dump down the coil and the parabolic continuation in the U.S. session. Closed as an inside day, but they proceeded to go higher on Wednesday, day 3. So coming back to understanding the templates, we saw 2 templates that had inside days on Wednesday. We went vertical in the London window. They made a higher high again, heading into the U.S. window. We had inventories being released at 10:30 a.m. That market broke down as inventories was being released. That made a lower low on the inside. Pumped up back into our peak formation high for the collapse. On day 3, back down below the open, which closed this market as a first red day. That close gave traders a thesis heading into the new day for a first red day parabolic opportunity. And as one trader pointed out, we'd also broke out and pulled back to the previous week's high. Thank you, Trader K. So we had first red day. Now, again, I'm not going to get into specifics about each session, but we had a market that went front side and broke down into the London session and went coiled sideways for the blow-off move just prior to our U.S. window. This is a London session first red day trade that blows off. The New York Open reverses this market back up to closing price. 2 simple, very powerful opportunities after a first red day signal. The first red day short trade and the New York Open reversal opportunity on Free Cash Thursday. Just repeating, Monday's the opening range. By the time Monday, Tuesday trade, we have our extremes for the week. One of those extremes may tend to hold. Day 3 goes parabolic and blows off in the direction of the breakout before reversing. First red day collapse and coiling sideways. So we still have our peak formation. We may have a first green day close. We may not have any setup at all tomorrow, but Monday to Friday, pump and dump opportunity for Thursday. Day 1, day 2's inside, day 3 parabolic, the midpoint range of the week, the reset. Day 1, day 2, tomorrow is day 3, Free Cash Friday. This is the pound Canadian and another type of template, just walking through the process. Monday's day one. We have day one shorts in the market. So day one shorts in the market that also makes a lower low in a downward moving market before going vertical on Tuesday, day two, and breaking down back inside. So a market that breaks out and closes back inside. Now, I've repeated this several times that it's not a failed breakout until the other side is hit. This market could coil sideways and continue to go vertical, even though it's closed back inside. So hence the phrase market profile uses out of balance and imbalance, a market that closes outside of the range versus a market that closes back inside of the range. CPI takes this market down and takes out the low on Wednesday, which now forms a 3-day possible setup. So traders keep getting confused, and as I repeat over and over again, Monday's day one. But when we get a template that sets up like this, and we have a failed breakout, now we have the peak formation as day one. Day two is our Wednesday. We have day one shorts in the market after our failed breakout. Day one, day two, that means Thursday's day three. Thursday's day three, and we get a lower low again, breaking the previous day's low before pumping up on the daily template. So we have weekly templates and daily templates. We get a lower low for the pump, 3 pushes, New York open, timings, closing price, levels for the dump, back down through the low of the week. Day one, day two, day three. That's a 3-day setup. But if we just back this up a bit, we'll see that Friday closed as a breakout day. Monday broke out in a new template. So we had lower lows. So we have day one breakouts in a new week. That's a new week. We broke out of a weekly low. Day two breakouts on Wednesday and day three breakouts on Thursday for the low-hanging fruit continuation trade. So this is a 3-day setup because we had the failed breakout Monday to Friday. Now this is the pound Aussie, just showing the different templates and the process of marking off each day based on hindsight, which is our golden goose. So we have a market that breaks down on Monday. Day one shorts, our opening range. And you'll notice as the week evolves and we trade back up into the previous day's closing price on Tuesday, day two, a triple top trapped above closing price at the high of the week after our opening range and initial balance, day one, day two, after Monday's opening range. So there's our high-low for the week, our initial balance, and they break out on Wednesday, day three, and blow off in the direction of the breakout on CPI. So again, we got 3 days building potentially just for one trade. If you weren't already trading, maybe you traded on Tuesday at the high of the day. Maybe you didn't trade anything, but you saw this moving and you're looking to try and buy the low because it's down low, which is why I emphasize again, if you understand the templates, there may be easy free cash laying on the ground in the US window for an easy 50 pips low-hanging fruit on Thursday, which is after our reset. Wednesday's day one, heading into the closing range of the week. Day one, day two, continuing in the direction of the trend. Easy, low stress, different type of template. We have a rectangle. This is another classical charting pattern. Again, closing price and low of the opening range forms a consolidation. The market has traded through that level, and we now may be still targeting that second level of a full range expansion. We have no signal days for a reversal yet. We'll see how the trade plays out tomorrow. I'll encourage you to go through many templates repeatedly, and whether they're indexes, oil, gold, whatever they are, and master the process and just be hunting out 1 or 2 best trade candidates a week and keeping things very simple. We are looking at the S&P, and again, starting Monday's day one, we had day one breakouts. Our opening range broke out. So again, I'm coming to the screen and looking at markets the previous day. What's happened? We have day one breakouts in the market. Day two continues in the direction of the trend. New York Open opens up high and continues to go higher from the high of the day. Level. They close up high. We go higher again. So again, understanding that on a day the difference on a day 3 where they came back inside without taking out the high of the day underneath closing price versus a market that breaks higher and sets up for a dump and pump template, heading into the New York Open. Some beautiful classical charting setups yesterday on the all the indexes for short squeeze setups, but also timing now. We have 1 hour, 2 hours, and 3 hours to the high, 1, 2, 3. And now let's just back this up. As one trader said, well, yeah, but how the market, they could move anytime, so how do we know? Well, let's go back and keep things simple. I have a gap on this chart from the beginning of the month, but we'll just walk through this. First week of the month, you'll notice again, timing cycle. Go back and review your templates when a new month begins. If you want to look at your daily charts when a new month begins, when a potential direction or continuation will evolve. So we have week 1, week 2. We're on week 3. We're on week 3 this week in December. And if we go back to our chart, we have week 3, and then we have day 1, day 2, day 3, breakout traders, 3 days of breakout traders in the markets. This is a pump and dump template. Now, how do we know that that's going to happen? We don't. But if you're keen to look for that opportunity, as several traders were, they took advantage of probably one of the best 5-star, 10-star trading opportunity templates just by being aware of the larger time frame, timings, levels, and the behavior of price. A 1 hour, 2 hour, 3 hours to the high, engulfment, reversal, collapse. Today's inside. I know that some traders traded the news back above the hourly wicks and back up to the breakout levels. Again, it's inside today, and I just, there's different opportunities for different traders. And so emphasizing that however you choose to trade is entirely up to you. I'm telling you what I do. These are the setups that I have focused on, and it's a way to keep me out of the market and to sit back on my hands. So if you were waiting just for one opportunity, this trade made traders more money than most in one day than most traders will make probably ever. So day 1, day 2, day 3 of breakout traders in the markets, a different template again, a pump and dump, a different version. So in closing, I will encourage you to go through your templates ad nauseum, understand week 1, week 2, week 3. What type of template are you in? Is there going to be a best trade candidate, or is it just a messy chart? Master the setups. Don't try to... this is where traders are getting confused and chopped up and mixing information and getting things watered down and mixed up. You're chasing all these little moves inside. And the setup isn't even there maybe on that day on that instrument that you're trying to, trade just because it's moving. Look for simple, easy, free cash. Simple setups, parabolic opportunities, rinse and repeat, scale them up in size. Master your craft. Be willing to sit on your hands and understand when you have a 5-star opportunity building and all you have to do is wait until it's laying over in the corner, walk over, bend down, and pick it up. 1% better every single day, traders. Master these templates. Have a great day, and may the markets go with you.